Are you busy?
Oh, yeah, we've been very busy this year. We've been actually on the phone since February on both sides, both clients and also to get the supply, which was quite tough earlier this year in terms of the disruption to the supply chain.
Well, absolutely. So you're buying the physical stuff here. So are people storing it? And have you seen any movement of people selling it if they bought it early at the moment? Or is the demand as strong as it has been all year, I suppose, since March at least?
Yeah, demand is very strong. What we see very active trading, both investors that are either increasing their holdings or new to this physical bullion side. We also see some liquidations by clients that bought early on. I mean, to remind you, since 2019, January, we're up almost 50%. So a lot of clients who bought in 2019 are liquidating some of their holdings, either to take cash or to cover for losses and margin calls in other assets. And interestingly enough, what we see some clients that are actually come to us and want to get finance against their gold. So they're not willing to give up the safe asset, but they are seeing some opportunities in other assets, or as I mentioned, they want to cover losses in other assets.
Is it still seen as a haven, or is it people out there who are just having a punt?
Look, I mean, I think last time we spoke, it was right before COVID, and we were optimistic about gold then, and we're still optimistic now. I mean, look, just look what's happening. We have a global recession. We have a pandemic that we're not sure how and when we will be out of the woods. We're not out of the woods yet. If you're looking at the data, we have still all those stimulus plans. We just announced, France announced a big stimulus plan yesterday, which means more debt, more printing of money, more continuing of the zero interest rates. You look at all this, you look at the dollar weakening, and remember, gold is, as I said, it's a hedge against all these risks. Investors are concerned. They don't have any better options. So definitely we see more upside.
Right, but we've seen this kind of steady retreat after topping a little over 2,000 a couple of weeks ago. Do you think we've hit a peak for now? I mean, what's your year-end forecast now for the bullion price and for 2021 too now?
Right. So nothing goes up in a straight line. So of course there'll be corrections along the way. We think the quick rally for now is a bit on a recess. As investors, they estimate what the risks and what other options are out there. But definitely, as I mentioned, we see upside as we go towards the end of the year. We need to see what the elections will bring with them. We need to see whether all these stimulus plans actually work. And definitely towards 2021, our estimation is that we're going to get into 2,200 or to 2,300 by mid-year 2021, based on what we see now.
There are still some critics out there about this gold rally. We spoke to one of our frequent guests, Andrew Ferris, a couple of weeks ago, and he said, look, there's zero fear of inflation. There's no likelihood that we're going to see some defaults in the G20 sovereigns. And he says when it comes to zero rates, that's simply just a false sense of drive as they reduce the carry cost. To what extent do you think these arguments are true?
I think very partially. I think gold has, I would say, and we mentioned it before, has an emotional appeal to investors as the go-to when they're concerned, and the price reflects their concerns. So with all due respect, some of the claims are true. We're not sure we're heading to inflation, but definitely there's a lot of concerns. And again, I'd like to remind, we're not done yet with the pandemic. We don't know how the recovery will take place. We expect a very slow and painful recovery as our economies need to adjust to the new situation. Just think of industries that are going to be wiped out or need to change course. So when an investor look at all this, yes, maybe inflation is not the major concern, but that is a concern. And the fact the dollar is weakening and the fact there are no other alternatives. The fact that gold is very liquid gives comfort to investors to even to park their money temporarily in this asset and wait for things to unclear in the future. Sorry, things to clear in the future, of course.
Are I'll take it from there. Joshua, I just want to move now away from gold to silver, which has been the big surprise. Silver has always been this commodity which has been sort of jammed tomorrow. It never quite gets there, but certainly this year it's been delivering, hasn't it? And does it have further to go? Yeah,
I mean, let's remember, silver went... the price rallied in August, a very short time span. It went up almost 20%. And remember, when we look at silver, we look both on the industrial use, which is there's not much demand there, but on the investment side, we look at the gold to silver ratio. And that ratio was very high, which meant that silver was underappreciated, now underpriced. Now, silver tailed gold, although in a slower pace. So what happened is silver basically matched the traditional gold to silver ratio, and it's comfortable price where it is now. But if we're right and gold will continue to rally, silver will catch up, as we are targeting gold to silver ratio of anything between 60 to 70. Remind you, before the rally in silver, before July and August, before the summer, we had a gold to silver ratio of over 100. Now we're back to around 70, 75. So definitely once gold pushes up, silver will follow right after.
Joshua, unsurprisingly, you advise investors to hold 10% of their holdings in precious metals such as silver and gold. Of course, you would say that. The point is, why would I want to store it with you rather than take out an ETF or buy into a company which mines the stuff?
Right. So to clear the mining stock questions out of the way, mining stock, you buy stocks in a company, which means it could be a good company, it can be a bad company. You're up to the management, what other activities they have. That's not gold. I agree that this year, the main driver behind the price were the central banks and the ETFs. ETFs are holding all-time high of almost 4,000 tons AUM now. And I do agree, ETFs are a good, I would say, tactic tool to get exposure to gold. Our concerns in the physical bullion industry, our concerns are two. One of them is the counterparty risk. If you're looking at the long-term holding, why do you really want to take a promissory note by a trust? You need to count on the trust to have a good business. And the second concern is whether the underlying assets is there 100% of the offering. Because I'd like to remind you, in April, we saw the problem in the future market in COMEX in New York. There was almost 5% arbitrage for gold in New York because there was not enough gold in COMEX vaults to supply the physical delivery for the contract. So again, from an investor point of view, do you want to have the physical underlying assets under your name, or do you trust the trust to hold enough gold to allow redemption? Now, it used to be the only ETFs used to be the only way to trade gold. There are great companies today, a lot of options. J. Rotbart is just one of them, but there are other good companies globally that offer clients to buy physical gold and store it, and the cost structure is the same as ETF. So again, I think strategically, holding physical still gives the investors the comfort and the sense of the peace of mind they look for.